Hello everybody, Bulldozer Investing. Today is February 19th, 2021. It is 5 p.m. US Eastern Time. Friday, it is end of week. It was a short week, so we're going to go ahead and first thing first, analyze VIX. But before we do that, I want to mention a couple things. If you do want to request, again, I always pull up my Twitter account in the beginning of the videos, but please follow us on bulldozer underscore INVST. Look for my daily tweet. If it's not there, just wait for a couple hours or something. I'll put it up there. If you just reply on this request single ticker, so make sure you request single ticker because our videos can go really long if you request multiples of tickers. So just request it and I'll make sure to follow it up. And that's how you would actually reach me out to to get your ticker reviewed. And I've been saying this every video, and under every single video I still get requests on YouTube comments. I'm not going to be able to answer the YouTube comments, so please go ahead and request through Twitter. Second thing is when we do post videos, so I'll go ahead and show you really quick. I can post videos over on Twitter and stock tweets and other investment forums. So what you want to do is once you want to click and go to the YouTube link of the video and make sure to expand the video description so you can quickly, by clicking these, like if you want to see plug, you can click on the link for plug and it'll go ahead and fast forward right when I start reviewing plug, so you don't have to listen to the whole hour and 25-minute video. That being said, I'm going to go ahead and start. Please do, if you do like the content, just please support the channel by subscribing. Again, I'm not making any money off of this. Just trying to grow the community and help people how to see how technical analysis work and how you can actually chart it yourself as long as you know a couple techniques. So I'm gonna, and another spoiler at the end of the video, please expand the description at the end of this video. I'm gonna go ahead and I've been asked a lot of times. I'm gonna go ahead and show you how I set up my indicators on Thinkorswim. They're not complicated. They're just easy sets of moving day averages, Ichimoku. I did adjust Ichimoku on a couple things, and then I have the internal indicators, MACD, stochastics, and RSI. These are very simple. But if you're new to Thinkorswim, again, I'll go ahead and show you how to set that up. On another note, I'm going to also, if you are not good at computer or charting at all, I'm going to try to, at the end of the video, I'm going to try to show you what tools you can use that would automatically chart, and you can have some type of visual or understanding of what the stock is doing. Okay. So now that we went over all the introduction, let's go and we can start with VIX. Okay, so the VIX, I keep telling you this, the megaphone formation that we drew, the lower channel of the megaphone, we keep breaking above, we keep coming back. So we close the day again under that channel, but however managed to close above the 9-day moving average. So the markets are neutral. Like I can't really say anything just looking at VIX, so I'm going to have to look at the index names to see what kind of indications we can see looking at the indexes. But as far as VIX goes, as you can see, the MACD is about to merge, and the stochastics is already have been curling up. Of course, there's no volume on this, so the VIX doesn't have volume. The contracts might, but the chart itself doesn't, so no evidence on the volume. What we're going to go ahead and do is we're going to try to look at the indexes, SPY, QQQ, Russell. I don't do Dow usually, but they're usually about the same chart anyway. So we'll go ahead and review them right now, starting with SPY. Let's go ahead and bring up the ticker here, SPY. Some people do E-minis. That's another way to chart SPY. I just go ahead and do the ETF. Again, couple warnings I gave you on SPY, right? One thing is that we have to stay above the 161.8, which we have, and we managed to, and then we should get over the 9-day moving average. We should not lose it. Now today it was looking good, but we did close under 9-day moving average, to me, this might look like a mini flag setting up. Okay. So you can do this flag couple ways. You can do it this way. You can also do something like this. So this is a flag, so the next downside should not scare you. It's just a flag formation. Or you can say a descending wedge. Okay. So however you want to look at this, either way, the formation to me seems bullish. Now you're gonna say, how are you bullish on an index when it was just like, you know, a year ago was like 220, 218, whatever the low was on that coronavirus crash. We're over like all-time highs, and you know, we're on a bubble, blah blah blah. I'm looking at the daily chart, so I'm not looking at the weekly chart to tell you what's going to happen in 3 months. I don't care what's going to happen in the 3 months, because nobody knows what will happen in the 3 months. Here we are trying to figure out what will happen the next 2-3 weeks. Okay. And from that point, if you do want to see if we're actually topping, we can take a look at the weekly chart and see what's going on. And all the internals look bullish on. By the way, I don't see any like negative, you know, divergence or anything on the internals. And then looking at the weekly, do you see any negativity on the weekly? I don't see it. Maybe you know, maybe I'm bad at seeing things. Look at this candle, guys. Do you see just the weekly candle? I know we had some ups and downs this week and it was crazy, but look at the candle. Do you see a candle like this, by the way? Like this candle looks scary. Um, do you see anything like that? No. It's kind of like this candle. It's kind of like this candle. Now, we might be under a quick pullback towards 381s that we don't know. If we lose 381, that's scary, because you see this trend, right? We drew. I don't know how accurate this one would be, but let me go ahead and fix that. Maybe I did that on the daily. That's why it just looks a little different. I'll take it back as soon as I finish doing the weekly. But look at this. If we do lose this, okay? This is, of course, a rising wedge, and the fall from this is going to be, and look, pay attention on this orange line, so 2 orange lines. And in fact, let me just go a little closer, and then I'm going to take a screenshot of it. I remember doing a video, and I remember saying that if we do lose this, what will happen? I do remember that video, just for people who are calling out tops. I don't like to call tops or bottoms. We wait for confirmation. Okay. So there you go. This is a rising wedge. So I'm going to take a quick, all these lines, let me go ahead and delete these so that it looks more simple. I like to keep the charts, and I'll go ahead and delete that wedge that we were drawing earlier so that you can have a more simplistic look. So clear, simple, right? I'll even delete the Fibonacci for you. Okay. I'll delete this Fibonacci for you. I'll delete the I'll delete everything, okay? Just to make it look very simple. And I'll delete our, you know, downtrend predictions. I don't care about being right, guys. I mean, I don't care if I lose this and say, oh, you know, I called this and then this happened. Like, I was the only one, blah, blah. I don't know crap. Neither do any of the other technicals or Wall Street analysts. Nobody knows anything. If somebody says, I know the stock market, they're lying. Don't even listen to them. We're just predicting depending on the, you know, previous trends and actions. Now, does this look clean to you guys? Yeah, obviously. It should. If it doesn't look clean, then you need to go watch a couple YouTube videos on, you know, what is a chart, what is a candle, what is a daily moving average, and so forth. So let's take a look at, I'm going to take a quick snapshot of this. Making this kind of long because, you know, we don't have a long list today. We didn't have too many requests. I guess people were kind of feeling sorry for me. I thank you guys. Like, I've seen a couple comments. It was kind of like it put a smile on my face that, you know, most of them, some people said, you know, thank you for all you do. You spend so much time on these videos. I'm rather not going to request anything today. Just wanted to support you. So I really, see, this is what I do. Like, this is what the enjoyment I get is, like, if I help people and, you know, people, you know, thank me and, you know, they learn something, that's the only reason why I'm doing this. Okay. So, and when I see that, and I achieve my purpose, it just makes me happy. So there you go. This is a rising wedge. You could hit the bottom, and come back higher, higher and higher. I mean, you can break out, that's fine. And that's where I have my like target here, right? Eventually, I think that's like 412, but we have a long way to go there. As you can see, you're following the mid channel. Okay, so we could either bounce from here, which is about 385, I think, and then come back to the top, or let me delete everything again. The bearish scenario, so you have to watch the weekly candles on this one. If you want to call the top, if you want to think the market is crashing, you gotta go ahead and do the weekly candles. Now we lose the 9-day moving average on the weekly. We're probably gonna go ahead and visit this 20. If we lose it, we'll do a false breakdown, come back up, touch the 9, and then crash even more. And these moving averages are gonna probably come up here, and we're probably going to touch the cloud and then have another V-shaped rally. That would be my correction estimate. Now, this is only a prediction, and I only say if this happens, if this happens, if this happens. I don't know the future. Neither do nobody else. I mean, anybody else knows the future, let me know. I'll pay them like 50%, 50% commission for letting me know what's going to happen in the future. Any of these guys charging ridiculous amounts of, subscription fees, claiming that they're, did this and that, I don't believe any of them. I think you should be your own boss. You should study. Of course, you're gonna get hurt here and there, but I mean, you don't learn how to, ride a bike unless you fall a couple times. So you're gonna have to risk analyze those people that are extremely successful, or just keep on making money off of their calls. It's because they have couple of hundreds of thousands of dollars, or even more than millions of dollars, and they'll go ahead and call something, buy an option or something, and you'll go with them, and you'll hit a couple lucky calls, and then all of a sudden you start losing money tremendously, and they're claiming, no, you shouldn't lose money, look, I'm making money, I'm making profit. It's because they keep averaging down. They have unlimited amount of dry powder. They know how to sell and buy at immediate actions, and by the time they alert you, you're looking at somewhere, you're working, and you missed it. So best way to play the market if you're a beginner is with 10% of your savings. I would say maybe even 5, and then buy small amounts, small chunks. So even with that 5, let's say you have $10,000, just play the market with $1,000, and then with that $1,000, if you're learning, again, this is a learning experience, right? With that $1,000, you can go ahead and buy an index, or like ARK or something like, or if you want to go ahead and buy Apple, whatever, right? Some predictable chart. So I'm not talking about penny stocks because they're unpredictable. They're news related. They can squeeze out and go to like 200% and then drop down like 100% the next day. So you won't learn how to analyze charts from those stocks. You won't learn, and that's not playing the market, that's just gambling. You want to be consistent. So you want to have consistent wins, rather it's small gains or big gains, doesn't matter. You want to be, like I've said that couple times, or million times actually, this is my way of predicting. This is my way of charting. A lot of people have different way of doing. Some people don't even use Ichimoku. They don't even know what it is, and they don't care, and they've been successful, right? So this is my way, and you'll develop your own way of charting, your own way of skills. But don't just try to, technical analysis is just an ocean. Um, Options is another different type of planet. So uh, don't just dive into the ocean without learning how to swim in a pond. And that's what a lot of people are doing. They're like, oh, okay, I have $100,000 saving. I'll go ahead and put all of it in GameStop at $300. I mean, like, that's the sort of things, stories that you hear, and like, you feel sorry for people. But the reality is that I don't like recommending paper money, like those like fake, they'll give you like $10,000, it's like virtual money, and you learn how. No, you got to play with real money. That way you concentrate more, and you learn from your mistakes, and it actually hurts when you lose and so forth. So this is what it is. Coming back to our topic, this is one scenario. It can hit the 9-day, bounce, come back, hit 20, bounce stronger, try to test the lower boundary of the channel. Again, You don't drop violently unless like the world goes to World War III or something, right? You always you always go down like 2-3% and then try to recover and go back to the channel, and then you even fall harder and just keep on slipping in waves. Now, Elliott wave theory, I honestly have to sit down and read a lot of books for it. I've never had an interest, but I guess it has some, truths about the certain motions and waves of the market, so you can go ahead and study that, or just have a general understanding of markets don't move straight up. It goes up, wave. Look at this wave, right? So you don't like shoot up like this. Not healthy at all. So that's my theory of the crash if it does come. And I always said mid-March. A lot of people were telling me, no, I don't agree with you. I think it's, February. I think it's going to happen during mid-March. Not a crash, but a correction. So something like this might happen. And then slowly get into the cloud and recover. Okay. Again, I'm just drawing random waves, but the ups and downs, you figure it out. So that's, and the upside could be that we go ahead and test the 9-day and then just break out of this wedge. First breakout, you never buy because you always have a retest and then go up. Okay. But usually the rising wedge, okay, oh, that's not a rising wedge yet. This is a rising. Usually the rising wedge ends up being bearish. The descending wedge, if it plays out, okay, it goes bullish. Okay, that's you got to study your formations, and I can't teach that on the channel. So just take this as a learning opportunity for the SPY review. I'm not going to go like do technical teaching on the rest of the tickers. Next up is QQQ. Again, this is the weekly now. We had the weekly chart, right, from SPY. Let's go ahead and delete everything, right? We've been doing a lot of lines and so forth and calling on the daily. And I like to just step down a little bit sometimes, and I always like to clear my drawings time to time and then see what's going on in the bigger picture, the bigger schema, look at things out of the box. You could do this way, but I like to go, and I don't like to play that long wick, but here you go. So that's one, okay? You can, if you were to do this, see this is a breakdown, but it came back from the 20. You could do this, or you could just simply do another channel, like a brand new channel. Something like this. I think the channel, it just goes with the 20-day. So that's what you would do. And then you could say, all right, so I see that in the long scheme of, picture, I'd say that, you could easily hit 310 on any major, pullback. That would be what? 338 minus 310, 28. Of course, I knew what the 28, but I'm going to grab 28 and divide by 338. So that's about an 8% pullback, which is reasonable. I mean, and most likely with QQQ is that your first line of defense is going to be the 9-day moving average, and it has been following it like a book. Look at this, 1, 2, 3, 4, 5. So we do pull back. My first would be 320. So if you're heavily invested into stocks or tech stocks, you can just have a hedge and buy the 320 month out. 320 put month out would be reasonable in terms of technicality. Now, if you lose that 9-day, and as we've seen it here, where was the bounce? Near the 20. So the worst case scenario, it would be like 311. I don't know like how far the 20 would climb up. So you're looking at like 310, 311, which is about an 8% pullback. That's another scenario. So a lot of people, complain about, I mean, not complain, but they might think about, why is this guy always bullish? I'm always bullish as long as the market is bullish. Nobody knows when the bearish market or the divergence, of course, we can tell, but it's always going to be like, okay, look at this MACD. It's like ridiculously bullish. So on the weekly. So what are you going to do? There are other like MACD oscillators and so forth. You can, there's so many indicators you can use. But overall, just looking at the indicators on the weekly, it just seems market seems strong. Yeah, of course, we're going to have like 1 week red candle, 1 week green, 1 week we're going to have like minus 3%, 1 week we're going to have plus 4%. So that's how the market moves. If you want to, you can also do an extension, which I like this one, ABC, right? So as you can see, just I'm drawing it very simple. I'm not drawing many lines. I just connected, this bottom, this top to this bottom. And what did we get? It was a perfect, Fibonacci levels here, right? Got a support here, resistance, support. So we should not lose 330 on the weekly chart. On the daily chart, you might, lose a couple dollars and then come back inside. So I'm just saying, like, we should not close it on the weekly candle. If we close below 330 on the weekly candle, you have to think 320 and 310 is reasonable. And 306 on the Fibonacci level is where we might hit. I don't know. So that's how you play the hedging. That's how you try to say, okay, I'm playing the upside, but there's always a downside to it. You know, would I be surprised if we hit 369, 370? No, because that's my target. Most likely, we're probably going to break out, come back, revisit 330, come back, revisit the bottom of the channel. So that's how the market moves. Okay. I don't see any major selling. Yeah, the red, you see like a couple red candles here, like this is heavy selling, but then the market was protected at the 20-day moving average. Now, what you see what I mean? Like this was a violent drop. It almost hit the 100-day moving average, came back and almost touched the 9-day, and then bam, collapsed. Look where you get the support, bottom of the cloud. So this is what we're gonna think. If we get like a coronavirus correction type of move, then you're looking at 324 or 234, I'm sorry, 234, 235, and it would make so much sense because where would that top be? Or the bottom, the current bottom on the crash would be the top pre-COVID top. So you see how we correlate things, how I use Ichimoku Cloud, calling the bottoms, the tops, um, you know, the Fibonacci, the channels, like how I incorporate things and try to get the schema, the grand scheme of things. That's how I would say if you're waiting for a market correction, your first target should always be 320 on the QQQs. Next target should be around 310, 306. So Fibonacci says 306. My channel says 310. Moving day average says 310 around there. And then worst comes to worst. That's a strong, you see this top, you see this top, you see this bottom. So your indicator of the 61.8, the 50% level, so 291, 288, would be the most severe pullback we could see, which would set us back to December. Is it reasonable? Yeah, I mean, like it is reasonable. You shouldn't get scared because it would be like 0%, 0% over the, I mean, the yearly here, right? But I'm talking about like beginning of December. So that's the story here. You don't get real pull-ups unless you get some type of pullback. So if pullbacks are healthy, and I'm not gonna do daily on the QQQ. Just saying, like this is a different view, right? We always look at the bullish side. Let's look at the bearish side, and then let's go ahead and reevaluate and say how can we hedge. Okay, so that's QQQ for you. Next up is IWM Russell. Let's take a look at Russell in the weekly. Let's clean up our chart and see like how the weekly looks and how we can evaluate the long-term projection. Yeah, the Russell is, on a tremendous upside, and what we see from here is, let's take a look, right? Let's just do a simple retracement. The top from February of last year to the lows of the March 95 something, right? 95.69. So somewhat, just to say like somewhat, we might be a couple cents off here, but look at this 100% support. Look at the 9-day, and I think the Russell is kind of like out of all the stocks, I think QQQ looks the safest at this moment because I could predict where it could come up to or down to. But I mean, yeah, the chart looks obviously bullish, but this is the issue, right? The harder you go up, the bigger the correction or the pullback is going to be. So you're looking at something like this. The tricky thing with Russell is that it's been going up, it's tearing up. The support would come around 9-day moving average. Let's say that this 161 around 214 could be a possible support on the weekly side of things if we do hit the bottom. So I always like to do extensions. So how you can do an extension would be, let's go ahead and do an extension as well. let's do the, I like this one. Okay, so the upside is 247, and you see how this 9-day moving average, the blue line, let me zoom in. You see how this blue line and the fib meets 210? That would be a perfect bounce towards the next upside, which does come nearly close to the channel that we drew. So that, again, we're studying pullbacks now, and we usually do the upside studies, but now that we've been talking about correction, where the markets are going, are we going to crash, what's going on? This is what it is. Just draw a couple channels, and I make it look easy, but some people are even much better than me, so they can just quickly draw the channel, they can visualize better, and so forth. And I might have not done this, since it's a weekly candle, it's hard to do the extension. You have to zoom out, zoom in a little bit more. So 161, 163.71, close enough. So I must have messed up on my Fibonacci retracement here. The low is 142.09. Give or take. What is the low here? 151.39. Okay, there you go. So this would be more accurate. So we'll say 243 to the upside, so make it a bounce and then move up. Or we can get a support at 208 or even the 90 moving average, which has been a very nice support lately for the past couple months. Okay, so that's Russell. If you do look at the daily, let's take a look at the daily now. Things are going to change on the daily. Now we're zoomed in. It's easy to evaluate the weekly. On the daily, 9-day resistance, 20-day support, 216. The 100-day moving average is at the 208, and that's where the flattened cloud top is. So it's reasonable if we revisit that area, but I don't see it happening. I see that this trend right here is your friend. So I would say that we might hit 217 area before the next upside. Okay, so that's Russell. Next up is Apple. I did have some discussions I saw on the YouTube channel, and we've drawn so many things in Apple. Let's clear the chart for Apple. Let's do let's see, remove old drawings, remove, yes, and nothing is removed. We'll say like 100 days or something. Maximum 30. So I guess when we say remove old drawings, we should say just clear drawing set. Yes, that would be better. Okay, so now that makes it look good. What I see in Apple is a very strong move, and this is a very easy one to predict. Apple is very easy to predict on the technical analysis. Look at this. I just connected this the lows of September, so September 21st, and the highs of the October, which is October 13th, and then the low on the November, which is November 2nd, and look where we hit up. So how many people would have guessed that these retracements work? And they do. You just have to see which dots, which points to connect, and they work pretty good. Now, does this look good losing the 100-day moving 100% Fibonacci retracement? No. Most likely Apple, I'm predicting that it might come down to 124 to 121. Again, do not forget that I'm long-term bullish on Apple, and I'm predicting 180 on the stock. And then you look at this. I'll take a picture of it. And you look at this formation right here. It's a wide cup and handle. Okay. But I've been saying it so many times that we need to break this one. This right here is like 138. Okay, so 138 is a magic number. Even here, this bounce, come back and go like that. That's fine. I mean, you're talking about Apple. Apple is a beast. 61% or 60% institutionally owned. What is it, like 6 billion shares on float. I mean, institutions cannot sell Apple that quickly. They have so much of Apple. Apple, I mean, you invest in Apple, you own Apple, and you just keep on patiently collecting it. You don't just day trade Apple. I mean, you can, like if you have like 200,000, 300,000 with margin, you see Apple down like 2%, and you gain like 0.5% and just take the pocket change of 2,000-3,000. I don't play the market like that. I've told, I was coaching kids, and I've told the kids, how old are you guys? I was coaching soccer. A lot of people knew that I played stock market and so forth. I said, they're like 13, 14. So 13 years ago, if your grandfather, your father bought you Apple shares, 110, whatever, right? You do the math. So this was like 7, 8 years ago, before I torn my ACL. Now I can't coach soccer because I can't even run properly. And then I'm thinking this question I asked was nearly 8 years ago. And then still, if they kept accumulating, you look at Apple from 8 years to today, you're like, wow, it's never late. Because the kids ask me, well, coach, is it too late to get Apple? I said, no. And if they were to listen and they were to get it, in fact, one of them actually reached up to me, and he's almost finished with college now. And he got my number. I don't know. He got my Facebook or something. And then he messaged me and he said, coach, I remember you played stocks. Do you suggest anything? You know what I suggested him? SPR and Boeing. SPR was $17. Boeing was, 140, 138. And then he goes like, are you sure? Like these are not going to go up. It's COVID. I was like, that's what you buy. That's what you buy. And SPR went from 17, now it was like 42. I told him to buy Carnival Cruise, was like what, 12 bucks, 12.50, and up to like, I don't know, today like 25 bucks. So that's how you play long, and you hold, and then you sell at 100%, 200%, whatever your criteria is, right? So when it comes to Apple, this is my criteria. Hard bounce, and I'm expecting a hard bounce off of the 124. And you can say that this is this could be a head and shoulder type of play. And then you could say this is a rounding top. You could say this is the neck, and then bam, right? You can revisit 121s. You can revisit the bottom of the cloud. But I'm expecting, so once all this, SPAC mania, once all this, clean energy, EV, all these things, I know Apple is getting into EV, but all these manias, all these, marijuana stocks, all these, stocks, the 20% mover stocks, their favoritism is over, their plays are done. Guess what they're going to move into? Apple. So you're losing 3, 5%, 10% on Apple. It's nothing. It's a solid company, so you don't have to worry about it. Now let's take a look at Apple on the weekly, which I did last video, I think. So the last video I did, and the 20-day moving average here is sitting at 125. So everything is calling 124, 125 area. And worst comes to worst, we could revisit 121. But do I think Apple is bearish? No. Because I'm looking at Apple for like long term. Okay. So the next bounce is going to be towards right here, like 150s. Okay. Even if you got caught here at 82 and it dropped down to 54, look where it is now. It hit like 145. Here, from 58 to 35, and then bam. If you keep losing Apple, you just keep on accumulating. You just keep buying. This stock, and I mentioned in previous videos, it has so much cash. Volume is drying up a little. Not many buys, a lot of sells, and so forth. So yeah, it's because all the momentum stocks, all these, they kind of, which I thought in December that they'll go into the bigger caps, but which they ran away. The big companies ran away from the big caps. They're playing these momentum stocks, squeezing, getting the most out of their buck. But then where are they going to return? So there's a saying, I'm Turkish, so there's a saying in Turkish that the fox is going to always end up being at the fur shop. So these funds, what it means is that you're just going to return where you're supposed to return. So these funds are going to, institutions are going to obviously return to Apple at one point, and that's when we're going to see, Apple moving up to my target. I said, nearly 200, so 204 is my target. Okay. I'm just drawing another trend line here. There you go. You can move up to 200 eventually. Okay. So that's Apple. So next up is this stock that I'm not really a familiar of, but then I got criticized about not knowing stocks and just, doing a technical review. Well, of course, the video's title is technical review. We're not here to do fundamental analysis. So one thing that I wanted to show, which I was going to show at the end of the video, is that there's FinViz and there's ChartMill. Okay, so ChartMill, let's take a look at it really quick. We can grab like quick information about the company. We can go to the profile and look at this. Why is it not going to? There we go. I think there's some synchronization issue. Wow, ChartMill. I was supposed to promote you for free, of course, but what's going on? Yeah, way to go. I think it just wants to show. There you go. All right, we got it's, and it's still Apple. Oh my God. You gotta be kidding me. It's just wasting my time right now. Did I record this song? ALPP. Let's take a look at the request on Twitter and see what's going on. ALPP. Well, yeah, the stock is not coming up on ChartMill for some reason. Maybe it's just a glitch. Let's take a look at FinViz. I guess even FinViz doesn't have it. ChartMill doesn't have it. We're just gonna have to stick with our old, good old technical analysis. I love this descending flag, or the wedge. I love how this cup and handle played out tremendously, and this is a very technical chart. You can do technical. You can do one thing, right? You can do the technical from this. And I bet you they're all the Fibonacci's are all going to end up being in the same place. You can do the technical extension here, okay, and then you can also do a technical extension from here to here, assuming that this would be the bottom. Okay, so everything is showing me that this stock is going to move towards $10. That's one thing. So let's get rid of all this chaos. Now, could I have done a better drawing? Yeah, let me go ahead and make sure that I got all the low and the highs. Let's take a look here at the low would be 301. And this low right here is 226. Give or take, not to the single cent. I can't predict everything, to the top or the bottom, but you get the point. So you can draw a trend line here, worst case scenario where it would hit. There you go. So you're looking at the 20-day moving average, and you're looking around $6 of a pullback. I don't like how the MACD, stochastics, and RSI is, and the moving day averages are curling. So what this tells me is that if it does pull back towards $6, you're going to look for a bounce. And that buy it at 6, and you see this wedge. But the thing is, when I see all the bearish crossovers on the moving day averages and internals, you're gonna do your best to just do the swing, like do a swing trade. Okay, there you go. So I don't know when the exact breakout is gonna happen. Obviously, I don't have like a magic 8 ball in my hand to tell you, what things are going to be like. But obviously, if it does sink to $6, is a good buying opportunity to play the 748. So $6 to 748 could be a really good bounce. I love the chart though. On the long term side, it looks bullish. I don't know too much about the company, and that the company is, we couldn't even pull it up in ChartMill or FinViz, but I don't like how it's merging on a bearish crossover. It could turn around. So this wedge, if this wedge plays, it could be a good play, but I would get in at $6. I love the chart. It's super bullish. There's no doubt about it. You know, levels to watch would be, without drawing the Fibonacci, the levels to watch would be right here. Okay. And you guys know, like, I'm pretty cheap and I like buying things on value. You can look at the gap here. And I love how these previous tops are ending up at the cloud bottom. So if you know, if any of this lower zone area you get into, it'll be a nice reversal. But it's like, if you want to start buying it here and you're impatient, you might get drilled a little bit. So you got to watch out. You got to make sure that you don't spend every single bucks in your pocket and then get, you know, 5-10% down. I think the real support would be here, which is around like $5, which is not a bad thing, because this is a coiling up situation. Like, the more it coils up, the next upside is going to be much bigger. You know, the next upside is going to be around, if this breaks out of 562, let's say, you're going to go to 984 and then eventually $14. You can also draw a trend line like this. So revisiting the 562 would be very healthy, and your next move could be all the way up to $14 if you're patient. Okay, so that is ALPP for you. Next up is BLK. BlackRock is a big investment firm, kind of like ARK, kind of like other Vanguard. I don't know if they're favoring like media company. Like, I know they own like a lot of media companies too. Look at this inverse head and shoulder play. This inverse head and shoulder. This is a head and shoulder. I'd say I get into it at 681, testing the waters at around the cloud bottom, and you could see potential. You could see a potential drop all the way to 670s. Okay, but I'm going to tell you something, and don't you guys think that I'm missing it. I mean, when I look at a chart, I see so many formations. It's just that I don't want to confuse you. This inverse head and shoulder play, but again, that would be invalidated if you know, if you break down here, and eventually this will be your target, or worst case, the bottom of the channel here. The bullish move would be to break above this trend line right here, and that would be the beginning of inverse head and shoulder. First resistance, top of cloud. It could fill the gap right around here, which should be your target. Okay, so if you buy somewhere around here at the bottom of the cloud, the arrow that I drew should be your target, which is the gap fill. Okay, so let's look at where the gap fill is, around 770s. So you're looking at a $100 move. If you buy it at 670 and you sell it at 770, that would be a good trade. But again, I don't like to buy things when the chart is at the top of the channel. Now it's probably at a, you know, midterm support. So the mid channel, and I mean, you can do this automatically. You can draw, like, you know, channels that are here, you know, regression channels. There you go. And you have to play around with it. So I'm not going to waste my time, but I like drawing my own channels. And usually the proper way of drawing the channel is that you duplicate it and bring it down. I just draw it like roughly, because I have to review, like, you know, 20, 30 names each and every day. So that being said, you can follow the channels. This was a nice, you know, bounce, but all it could do is go back to 720s or maybe hit the top of the channel. But the better value buy would be around the bottom of the channel. It's a solid company with very solid dividend. This is a value investment. You're basically going to long this, kind of like how, you know, your college fund 401k. You could never go wrong by buying BlackRock, obviously, but this should be your support. Let me delete all these channels, and I'll tell you where your support is. You see this top, and then you see this bottom. That's a very distinguished support, and which you did get in a way. You did get that support right here. It might come down there, it might not come down there, but if it does hit at least this line of the cloud, which is around 688, that would be a good entry point. This could move, I mean, this is general market move stock, right? If markets go down, it goes down. If market goes up, it goes down, type of thing. It doesn't act along, by itself. But I like the name. I like the dividend. If you have bulk of money, you want to just put it and forget it. It's a good play. The stock, once it gets into the cloud and you have a red cloud formation, which I really tend to not like, but again, you could play this bounce at 684 and looking to fill the gap around right here. Okay. So that's BlackRock. CLSK. So CLSK was very wavy today. It was like up, not today, this week. It's like up, 25%, down 10%, up 16%. But overall, as we reviewed the chart previously, it reached not only above our target, but also gotten a support right at the trend line that we drew, the upper trend line. And also look at the 50% Fibonacci, how it was supported. And it picked up today. It's not looking bad. I don't know what the move was about, but I like this W forming. So you see this W, okay? I like the curling bottom. I think this could easily head up towards the our initial target. Our first goal is basically 53.64 if you're longing the stock. I can easily draw another extension from this bottom right here, the top and the bottom. Okay, you see how this thin line of Fibonacci level and this 50% and this 50% like basically overtops each other. That's why I sometimes draw the boxes depending on two different Fibonacci levels, and I get the widths of the boxes that way. You could possibly also extend the Fibonacci towards here. I like it right here. Where did I draw it? Right here? Yeah. So that played out perfectly, actually. The way I drew it, it played out perfectly, so we're not going to touch that. Okay. All right, so again, yeah, pullbacks and everything, I'm looking at it, it's over 9-day, the moving averages are bullish, the MACD had turned around, okay, stochastics is moving up, RSI is still there, RSI is doing a little cup and handle. Everything is good about this chart. So I know the volatility in the chart could frustrate you because you're up, 30%, then it goes back to like 20% and you lose 10% on the profit. But if you long the stock, I do see a distinguished bottom pattern here, and it's way above the cloud, so you can get an estimation of where it could possibly go and where it could possibly go down and up. So that I like about the stock. I think the 9-day moving average is probably going to be your first support, which is sitting at 32.38. $42 should be your first target. Your second target should be 53 bucks. Okay, that is CLSK. Next up is CTRM. So I hope that CTRM is on the so this is what I was going to say. Like lot of the times that I don't know the stock, I like to go ahead and go ahead and see a couple things here and there if we can grab some information while we're doing the chart. There you go, Castor Maritime, ship owning company, active dry bulk sector. It's in Cyprus. You gotta watch out with these shipping companies. They can split into like 1 to 100, 1 to 10 very easily at times. So that's what you want to watch out for. When they move really good. But look at this, like it could kill you for months and months and months, and all of a sudden they just pick up, right? You want to buy these here very cheap at like 20 cents, and then they also have a schedule of splitting, so you just want to make sure that they don't. The chart looks bullish, yes. And of course, with the oil sector going up, these sectors, like if the economy opens, these sectors can easily go up with it. And if you don't, and this is what I was talking about, like if you don't know how to do chart analysis, these sites are very helpful for letting you know what the companies could do, and sometimes they can draw the trend lines for you. and you can easily see like, okay, this is the first support line, second support line, this would be a resistance. You kind of get an idea. Of course, it's not going to be like the charts that we draw, and it's not going to be in the same flavor. You know, you get my commentary, and so forth, but it could give you an idea. Again, I always mention, you know, the stock was no volume at 11 cents and it moved up to 19 cents. Now it's sitting at $1.20. You got to do your risk and reward analysis, and if something happens to the markets, these things will go down first. So having said that, it's on a bullish run, no doubt. No doubt about it. This could go potentially, your next target is 153 and 210. The support would be around 96 cents, and then your 20-day moving average, which is at 88. I don't know the sector too much, and I've had like, you know, dry ship and, you know, other companies that kind of do split, and then like the investors go nuts because then I don't see split into this company. But if you look at like dry ship and other companies, I don't know if they're in the same business, but it's off of Cyprus. So and the pattern you see here on the 4 hours, it looks bullish. The MACD is about to cross over, stochastic some time, RSI needs some time. So if it does break, so you gotta watch this on the 4 hours, right? If it breaks above this trend line, you're looking for the next upside. And I always say this a lot, that when you have, let me go ahead and draw this really quickly. When you have a formation where you form a, you know, rounding bottom, and then you draw a semicircle, this is where you want to risk and do an entry. If it fails, your stop loss should be this, because it can go down tremendously. But if you want to risk it here, and you can, you know, come back and do a cup and handle and run. Okay. But that's the best here is the risk to reward. That's the best entry. This is not a good entry, right? This is a good entry. And you draw a trend line here, and you break above it. This is a good entry. And even if you ask me here, I mean, I wouldn't risk it. But then when you get the confirmation here, then you go in. Okay. So that's my analysis. I'd say that current price would be a pretty good risk to reward on the 4 hours, especially. You got to watch out. You have to break over $1.27. That's one thing for sure. Okay. Next up is DPW, Alt Global Holdings. So let's quickly look at what they do. Diversified holding company name. Company provides industries including defense, aerospace, industrial, telecommunications. So it's a wide variety of textile. They do a lot of things. Okay, based in Vegas, American company. Let's take a look at this. Interesting. This is the 4 hours chart. Again, I'm seeing this rounding bottom. Again, I don't see a lot of volume. I have to check the volume, but I see this rounding bottom. And you break over the $7 range, you can head up and go. Okay, not a bad looking chart. Let's look at some levels on the daily. Oh, I love the cloud top support. Yeah, this is a good looking chart. Of course, I don't know the volume. It seems okay. What is the volume here? Like 57 million, 36 million. Yeah, looking good. Let's go ahead and do some technical analysis on this and see where it could go. You're looking at 813, 924, and 1286. So those could be my level for the next upside. But I like, if you lose the support at the cloud top, that's that you have to watch out. Okay. Next up is FUBO. As I mentioned, every time I do the review, I have FUBO on my trading journey account, which looks like crap right now. I was up like 80%. I did some very risky moves, and I'm like, the last 3-4 months I'm only up 3%. So I went from like, no, forget 70%. I was up for the last 3 months, the 3 months of the journey. I was up like 120% at one point. Now I'm only up at like 3%. So that's, I don't even feel like showing it. It looks like shit right now, but sorry about the language. So I'm hoping to fix up my Journey account somewhere if FUBO helps me out here. Um, it, we're getting a support around, for the 4250s, but we're having very hard time on breaking above the 90 moving average. On top of everything else, the 20 went under, the 20 went over the 9-day moving average, which seems bearish. So that doesn't look good at all. But we could if we could see, let me go ahead and draw one thing. If we could see this rounding bottom establish, so something like this, which is going to take your patience in this pitchfork channel right here, you need to break above it, then you're going to, stay alive. But um, we should hold the line and we should not go below 42. And people know that. So many technical guys, not only me, if you go to Twitter and other names, other chartists have said that so many times. But what's even worrisome is that they're like, okay, if it hits 42, forget it. Well, yeah, it's going to go to 38 if it breaks eventually, if it breaks down eventually. But my target is that, yeah, I like it to go down to 38 so I could buy more. Because I'm looking at this chart and I'm seeing long-term play. And no doubt about it, I mean, you could see this cup and handle. The handle is kind of driving it down, but if we get above this, pitchfork channel, and which we did, which we tried to do for the last couple of days, and we were accomplishing the mission. But having said, the Palantir earnings had caught attention, so a lot of the momentum players got into Palantir. Roku earnings and all these earnings are coming up, and the earnings will come up for this company as well. March 2nd, if I recall it right. But why am I not seeing the oh, you know why? Did I do company actions? Yeah, the company actions are there. Ah, this Thinkorswim, no matter how much how many times I use it, and it just, gets me. It's like some of the things that I had, it just gets lost. I don't know what's with it. So my corporate actions, let's go ahead and do this. Corporate actions, okay. Yeah, it's ridiculous. I mean, it usually shows the earnings, and it's not doing that right now. Which is kind of frustrating. But I mean, I think I recall it. It's March 2nd. So till March 2nd, I don't see any, I'm not gonna. I think we're not gonna see any action. Having said, the MACD doesn't look ready yet. You gotta wait for the MACD, kind of like this. You gotta wait for the MACD, and it has to roll down. So this, you see how this lasted? I think this is even gonna last longer, and we might get a support off of the 40 or 38 if we cannot get a hold of breaking above this pitchfork, this blue line. Okay, as you can see clearly that every time we go above it, then the moving averages are crossing. So everything looks bearish on our side right now. I'm not gonna lie, just because I have the stock, it doesn't mean that I'm gonna like try to pump it up or something. But what I see from this name, what my goal is to hold it until $100. Now, will it get there or not? That I don't care, because this chart looks very similar to how Roku reacted in its early days. Okay, see this 109? My first target is 76. It could pull back and then go slowly, and then eventually $100 is my target. But again, I don't want to pump up and give false hopes at this moment. We got to look at the pitchfork, and we want to get in the pitchfork, and then your next resistance is going to be 49.66. I don't want to talk about the $100 right now because that's my long-term target. And you guys know when I get into a stock, rather I said Palantir at the 25 level previously when it shot up to 44. A lot of people lost their patience, and I said patience, patience, patience. And there you go. You get your 90%, 80% move, which I think is going to have the same thing, same effect here. Okay. Just be patient. Very low volume days. If you look at the volume size here, 10 million. I mean, It's not trading much, and then it's so annoying during the daily action. Just look at the daily action. It goes up 5%, it goes down to 0. So we were up like, at one point 44.60s, and then that was like plus, 5+%. We started, almost one. We started pretty good, and we went down, and we were like only up 1% or negative at one point. Went up to 5%, then finished the day almost flat. I mean, like 1.7%. But these moves frustrate people. Don't get frustrated. Okay? Don't get frustrated. You just have to be patient. As I said in Apple, it could go down to 121, but my target is 180. So you got to look at the long term sometimes. Next stock on our list is NIO. The EV stocks, like, you look at NIO and Tesla, they've been down, but then I see NIO as being, as I predicted yesterday, that we're probably going to have this 50-day moving average as a support, and this is what I like to play, and I mentioned that before. The cloud top bounces are always tremendously, um, violent. Like it could, I mean, the first, you're always going to test the 9-day moving average at 58.79. You're going to pull back a little and then run for the next to the upside. But from what I see is we got to go ahead and cancel all of this FIB because it's not doing anything. So the bottom is going lower. Um, we have to hold 20-day. I'm sorry, the 50-day. It's gonna go ahead and test the 58s, the $59 range. That's gonna be your first move. I think it's just coiling up till the earnings. Now the earning effect, I don't know how the company does in its earnings. It did declare the NIO day. We see this jump. It declared auto sales, monthly auto sales or quarterly, whatever it was. It jumped. Now that I like stocks pulling back towards, closer to the earnings day rather than going up. And I said that with Disney. Disney had a beautiful, chart, but I said I like the chart, everything is bullish, but I don't like the fact that it is going, to the upside while, you have like 2-3 days left for the earnings. So for NIO, it's the exact opposite, and I think it would be a good risk reward ratio to go ahead and play the earnings then. And look at this extension that I just drew randomly. And it held the 100% like a champ. And I said that it's probably going to 58.59. The Fibonacci, that was just the eyeball just pointing out the averages. So the Fibonacci retracement is telling me 59.46. So that should be your first target. If we break above, we're going to $70, which has always been my target, and 84. I said like 82. So it's actually 87 now. Okay. So there you go, but your first target here is 59. Okay, that should be your goal. Once we get there, we'll go ahead and do a reanalyze things. Until then, your target is going to be 59. Your support is going to be the cloud top. Once you get there, it's going to be the cloud top. And the earnings, who knows? Who knows what we can do in earnings? Next up is NNDM, and I've reviewed this couple days in a row, so I don't know what changed yet. So everything we said was basically it's what's happening. I said that, yeah, it hit the channel bottom. Most it's gonna do is go ahead and hit the channel top, and that's what it exactly did. Right now, I don't see anything on the MACD level or the stochastics as for being, bullish. Um, if we can't hold this channel, which is sitting at 1196, let's say 12, if it goes down 12, it's going to go towards the 1117 area, or maybe it'll it'll touch the cloud top and then jump. But as for now, what my indicators are telling me, it's there. I don't see any bullish signs. I can't just make up things, guys. You want me to say something bullish, I can't unless if I see a bullish sign. Or if you want me to say something bearish, I can't unless I see a bearish sign. So the indicators are bearish. The average crossovers are bearish. And only thing we can hope for is to hold the $12, what is this? 1287. So you can hold that 1287. I'll go ahead and draw. Oh, sorry about my dog. Sometimes he scares me too. So this low, or what is this? right here. 1296 should hold. If it doesn't, then it would be super bearish and it's probably going to revisit the $10 area, which I wouldn't like. You want to hold the channel, maybe a little below, and then go back up. Okay. So, but what we said a couple videos ago, I think it could have been last video or 2 videos ago. I said that if it hits the channel bottom, it's a good swing play to play the channel top, which that's exactly what it did. Okay. Next up is QuantumScape. Yeah, I said, when we were here, I said I don't see it's. I think I was asked right here. I said I don't see any bullish sign unless we get a rounding bottom and then we break out of it. And that's what exactly happened. There you go. Let me go ahead and draw what exactly happened. I don't like to go in stocks or say it's bullish until I see an eventual rounding bottom and a breakout. So you see this rounding bottom. Where did the breakout happen? Right here. Right when it crossed the moving day averages. This is an inside day, and then it broke down the 50, or it broke above the 50, came back to revisit, got a support, and I said maximum upside. I see if you go and watch that video, guys. Last time I talked about QuantumScape, I wasn't bullish, and I said it's not ready yet, and if it does go, it's going to hit the cloud bottom. That I'm sure, I'm definite. So I'm not, I'm not trying to say, oh, I guessed it right. What did I say? I said I don't see any bullish signs until, I like the round. If it goes through a rounding bottom, the most it could go up would be the cloud top, which is sitting at $71. Now that it hit that, it could basically, what will happen, and I'll tell you that, is it has a distinguished support right here. So worst comes to worst, you can revisit $54 and retry the cloud bottom again. Okay. And I mentioned that huge gap. The cloud resistance was stronger. It couldn't hit the box, the gap, but it was pretty close. So if you expect me to say anything on this chart, is that you need to hold the 50-day moving average on the daily chart. It lost it a little bit, but if it picks up, I think it could revisit 71, and if it breaks above, you're super bullish. If it goes down, you get the 9-day and this the previous top and the bottom of this candle, which is sitting around 54.50 levels. Okay, so that's the side of the story. Now that the moving averages crossovers are bullish, now that it broke above the 20, it came back, but it broke, I'm sorry, 50, broke above the 50, it tested the cloud. If it retests again, I wouldn't be surprised. So you're looking at $72 visit again. So 10 bucks up will not surprise me. That should be your target as well. I love the MACD curling. Stochastics is bullish. RSI should pick up, and you should visit 72 and above if it works. I mean, I could try an extension here. I don't know how much it's going to work. Yeah, you're looking at the cloud top. Basically, 86 should be your the upper boundary target. Okay, so that's QuantumScape. So next up is SCHW. Is this Schwab? Yeah, it is Schwab Investment. Okay. Wow. See, this is a powerful move. If it does an inverse head and shoulder, it would even be better. So I'm expecting a little pullback and then a pickup. So I'll draw exactly what I'm expecting from this formation. You get the shoulder, you get the head, and then you get a second shoulder, maybe a cloud top bounce, and then move up much higher. And that's what I would look for. I wouldn't chase it up here. Reason why is because, I mean, if you're a long holder, there's no chasing in this name. It's a solid company, right? It's a well-established company, not like Robinhood. So there you go. This previous top, it broke and it came back below. You're going to see if it holds 9-day or even the cloud top, and then go for a higher move. No doubt that this is a strong bullish chart. I can tell you that. Let me see if I can draw a pitchfork on this one. The reason why I say that is because not every chart is like could be drawable on Pitchfork. Yeah, perfect. Let's see if we can even make it better. What is the low on this? 50.77. Give or take. So you see, it tried this mid channel of the Pitchfork, and I said if it tests the cloud top, it could even revisit the bottom of the channel. So this would be a very good buy, even if it fills the gap right here at 9-day moving average. I believe the $58 will be a gift if it gets there. Okay, it's a nice dividend stock, solid company. You can invest long and forget about it. It had, I mean, it did, hold for some time and it just never moved, and then bam. I don't know if Schwab is merged with, what are they merged with? Ameritrade? I'm not sure what it is, but um, it's a solid company. So your target for long term, and again, I learned this from um, Puppy Trade, so all due respect to him. Um, I have to give him the recognition for teaching people the Pitchfork. I've honestly never like used Pitchfork at all until I found him using it. I'm like, wow, it's really powerful. So again, all due, give props to I have to give props to Puppy Trades, and you can go ahead and visit his channel. Great guy, great predictions, solid predictions, honest guy. I recommend him. Yeah. So here you go. The Fibonacci is dead on 63.45, 63.34. So give or take, it was over by 9 cents or something. What is it, like 11 cents? So having having the Fibonacci, the Pitchfork prediction for this is, let's say sometime in mid-May. It says $79, which doesn't look bad, but I'd try an entry at the lower end of the channel. My channel was that, let's go ahead and delete this. My channel was that, I didn't draw a channel actually. I just said that it bounced off of 58. It would be a steal. I think if we get it at 58 and sell it at 75, that would be a good opportunity. Of course, the resistance we drew, the second resistance is 66.27. I'd wait for it to have it come to you. Okay, and this is the level that you also want to watch. You see this, and you see this, and you see this top of the candle, you see the gap, you see the 9-day moving average, you see the cloud top. Everything is pointing to 58 bucks. If it gets there, I'd say that it's a good company to get in at 48. I'm sorry, did I say 48? 58. Okay. So next up is SENS. Honestly, they were doing something. What were they doing? Like was it for a coronavirus play that they were doing a drop vaccine? I forgot what it was, honestly. So you guys have to like write it down on the YouTube comments of what they were waiting on, and if it does work out, then it's good. The stock can move much higher. And not that it didn't. It went from 35 cents to 5.56, but see, when I like to get in stocks, I told you many times, guys, in this video, that's the formation I want. The rounding bottom, and then when you break, so let me clear this chart again, just to make things clear. So you see this rounding bottom, right? And the price right here broke above the 9-day moving average, and then broke above the downtrend, right? And then look at this, bam, flag, bam, flag. You need to get a 9-day support, and then bam. But I'm not sure how extended this flag or the descending wedge is going to play out to. We can draw a retracement to basically see where could, I mean, the first thing first, the first protection is going to be the support is going to be 429. That's one thing. I don't even have to draw, right? But let's go ahead and do this move right here. you're looking at the 20-day moving average, which is 324. Now that's the worst case, like bearish scenario. Now let's look at the upside. Your resistance is going to be 519, and $7 should be your long-term target. Okay. I will draw a quick line right here. You do not want to break below this because it can revisit 324. Again, like if you're not so good with technicals, right? Let's say that you're not too fancy, right? You can always revisit, again, FinViz, just type SENS. I mean, this time it didn't. The advanced chart didn't draw anything. That was kind of out of my expectation. But the issue is this, right? This company was $4.84 tops, and it goes down to like 35 cents. So you're buying the company from here, you have to expect the worst, but I mean, the volume has picked up. I don't know if it's institutional buying, but I don't see too many institutions buying here. A lot of shorts maybe that could trigger the next, move up. I just don't see the risk reward ratio unless you're doing a quick swing, or unless like I forgot what they were working on, if their medication, if it was it like it's not commercial, like glucose monitoring. Oh, this was the glucose monitoring. I'm sorry, yeah. So if that comes out, oh, it's close to my house. It's actually, in Maryland, where I live. So the play here is, I think, yeah, I remember my sister was recommending this stock, and she watches all these YouTube pumpers, and oh, to the moon, we're gonna go, like this thing is gonna go like 1,000 bagger, whatever, right? And she gets so, but the machine here is that you'll be able to, I think they insert like a chip or something, and then you'll be able to monitor your sugar level without hurting yourself, basically sticking needle and getting your blood measure. So if that works, and if it goes through FDA, then that's going to be, your ticket to the casino. The reason why I say that is because it's 50-50, right? It's either going to be there or not be there. And you just have to, gamble on it. Your first support, 403, your second support, 367, and then the 20-day moving average is also another support at 341. If you want to play this game, you're going to go in for the machine to go through FT. I don't even know if it did get through already. I mean, obviously this was a strong buying, and then even though there's some selling and there's some buying, low volume, so I think the company is waiting for the next news, which could drive this company up to $7 and eventually $10. But when you buy these companies, you got to always get the amount you're willing to lose, because it could revisit 35 cents for any reason and say like, oh, the machine didn't work. FDA is like, get this thing out of my face. We don't like it. And then next thing you know, the stock crashes. But I've, from my sister's research that she's been telling me excitedly, that this is going to be the first machine that you don't have to, stick a needle and get your blood and measure it. So people with glucose, I hope it comes out and they're successful, because I'd feel, good for the people. And I'm sure that most of the insurance companies should cover in a couple years or so after the machine is out. Okay. But I'm not so sure about, sticking a chip in my arm or something that you'd have to, deal with. So next up is Sundial. Remember what I said about the marijuana stocks is like, I don't like to chart them for the reason being is that they go up so fast and then they collapse. I've seen the Tilray play go up to 150 back when it was like, what was it, like 2016 or 2018? I can't remember the year, but that thing went like 150 in a day. I was like, it went down so fast that by the time I got the $90 puts, it's like I didn't make any money. Like I was like, I should have acted more quickly. And my friend was like, are you crazy? It's like 150, 160. How's it going to drop down to $90 in a week? I'm like, how did it get up to 150 in a week? So that's the real question. So it's like you're asking yourself, 14 cents, it's like $4. How did it go up there? Forget how did it come down here. Sector rotation. People, the rotation goes in the wheat stocks. You know, right when it's so easy place here. Like you guys, if you can figure out the dates, the proposals where the Congress is gonna, you know, propose a bill to the Senate, you get in from like a month or two before that, and then right when the media talks about, oh, you know, the Congress is, you know, proposing this bill, that's when you sell. So that has been the same play forever. The elections, I remember Trump and Clinton going at it. All the solars and marijuana stocks, they pumped up thinking that Clinton was going to win easily. And then next thing you know, Trump comes out of it, and then bam, they go collapsing. So it's always been like this with marijuana stocks. And Sundial, I've researched their hemp oil. They do vapes, and they sell marijuana. I guess it's legal in Canada. I'm not sure. I'm sorry if I'm ignorant not to know. I know Amsterdam, obviously, the whole world knows, but Canada, I don't know. So it's just I seen their website. It seems like, I mean, it's not like a billion-dollar worth of company, you know, doing big business. I don't know. I've seen their website. It just seems like your medium-sized, you know, dispensary type of company. Um, to me, weed stocks are seasonal, news-driven, not technical. Now, having said that, if you ask me to do a technical review, I better do it, besides yapping my mouth. It held the 20-day moving average, which is good. Again, these are at your own risk type of place. This is a very distinguished, very solid support sitting at 161.8%, which is sitting at $11.10. That would be the play that you would want to do, because I see a good support. Look at these candles. I'd go for that. Um, Other than that, remember when the stock was up here, I said this could revisit $1.80, and I might have gotten to this. I don't know. There's this one person, I don't know who that is, but collectively, every single video I do, I always get that one dislike. I might have hit somebody's nerve and they're like after me. But anyhow, I really don't care about the dislike. But anyhow, the thing is, when I say these things, don't get emotionally hurt because it is what it is, you know? You buy low, you sell high. You don't buy high, you don't sell low. You don't do that opposite. And whenever I say I'm cheap, I like to buy things on the discount. That's what I mean. That's how the stock market works. That's how business, that's how trading works. You're trading something, anything, stocks, anything, goods, items, you buy low, you sell high. That's the point. So looking at the stock being 14 cents back in November, and you're purchasing this at $1.37, it's still not a discount for me. A discount for me would be somewhere around here, like 46 cents. You're going to be like, oh, I hate you. How could you say that? I'm not saying it's going to go down there. I'm saying, like, if I was a buyer, I would have bought it at 46 cents. Now, I didn't, of course, but um, I don't know if I could buy it here. It could bounce back towards the 9-day moving average, which is sitting at $1.90, $2, or even the fib right here, which is $2.06. If it bounces there, would I get surprised? No. But would I take the risk? Do I have the guts? No. But this is your play. You're either gonna buy this here and play it up to $2, or you're gonna, you know, you're gonna take the risk of going down to first $1.10 and then all the way down to 87 cents. Okay, that's your choice. For me, I can't make, you know, yeah, I could do a wedge and so forth, but these are, again, these are not technical, guys. Obviously, they're not. These are news driven. If you want to play weed stocks, go figure out when is the next Senate proposal, Congress, whatever, right? Whenever those dates are, just buy a bunch, bulk, month or two behind it, and then let it fly, and then sell the news right when it hits the Congress. Okay. Next stock is THG, Hanover Insurance. So Hanover Insurance, let's take a look. Obviously it's an insurance company, right? There's nothing that we need to look at, but like I promised, if there's any news, maybe any merging going on, so let's take a look at ChartMill. Almerco Financial Corp is a non-insurance holding company. Company offers financial products Services in two major areas: risk management, asset accumulation, blah blah blah. So I don't know, like they're doing all this during the COVID section. Maybe they'll have a good business. Let's see what the stock chart says. See what I mean? Like sometimes you don't have to draw anything; it gets it for you. Obvious, support line would be around 112. Your resistance at 118. Your upside is 126. Lowest it could go is 106, and eventually you don't want it to get there, but $94 would be the lowest, the risk that you have to take. And then you could look at the technical analysis, and it could see you see this huge, drawing on the weekly, and then this head and shoulder. It seems like to me, what it is a head and shoulder. You could say it's a big trading range. I don't know. We'll go ahead and analyze it, and then you can always take a look at here, advanced. So as you can see, it broke down this wedge. It draw a big wedge, broke down the ascending wedge. I could get a support at 105. What did we say here? I said something about 104 area, 106. So right here, this is the what is this moving average? It doesn't even tell me what it is. Yeah, it should tell you. I think you know Finviz does a better job labeling their moving the averages. I think that is the 200-day moving average. This is the head and shoulder. This is the neck. So we'll see how that plays. And then let's go ahead and draw it ourselves and see what we get. I mean, my chart, comparing my chart to this chart, why does it look so, it looks a little different, but let's take a look. First thing first, we have to get some, channels, okay? I mean, I don't know how, I think they did the channel this way. There could be two channels, right? There you go. There's so many channels you can draw on this, but I think the most appropriate one, which I like to do, is here. Okay. So you're going to look at the channel support. I don't like when the price gets rejected on top of the cloud and then you're forming a red cloud. That's not a good sign. On top of that, you lost all the moving day averages. Let's zoom in into MACD and see what the MACD looks like. MACD is okay. It's reversing. Stochastics, I don't know what it's doing. RSI is dropping. This stock is, if it loses this channel right here at 112, it's going to revisit the 100, which is at 110. And the cloud bottom seems like it's 106. So 106 is definitely a play that you should consider, or not a play, but a risk you should consider if you're in the stock. So this range right here should be a solid support, but would it get there? Would it bounce and go back up? I don't know, but what I do see here, which I'm going to do in a second, just have to take a screenshot here. This head and shoulder play and the neckline, if it breaks down, it could easily revisit this area. Because there, you see this huge gap right here? That could be the potential. Now I see a dividend here, 70 cents. Earnings has been solidly increasing. It's just that sometimes, just like Apple, it had good earnings, but it's losing its strength. This could also be a bear flag. Again, I just have to show you all the formations that I see in my head, and they might be good, they might be bad, but here, that's the bear flag. Again, you lost the support here, which is not good. You have a trend here, okay? You have a trend here. So if you revisit and hit here, you could do a quick swing play to go back and retest this support here, which is right here. We'll see what that is, okay? So I'm drawing these visuals to help you out of what I see when I talk. When I start talking in my head and I'm like, oh, it could go there, it could go here, you guys can see exactly what I'm talking about. You obviously see this downtrend that I just drew, right? Okay, that's a downtrend. So down the channel, up, down, up. So if you revisit this, then you're going to go back up and down, up. Whichever it breaks out or down, we don't know. But I think that the potential target could be eventually that $106 area. And then it can break out. But I like to see, what I like to see, so what I usually like to see when I get into stocks is the rounding bottom. So it is doing that in a way. You don't want to lose where it's sitting is very critical, guys. Look at this. So if you break down here, down this channel, basically this orange line that I drew, if you break that, then it goes all loose. Okay. So you want to make sure that this rounding bottom is protected, and you don't want to get down below this channel. Other than that, it's very predictive. Like it's like, you know, the bottom of the channel. I don't like to buy things at the top. I like to buy the bottom of the channel, and it's getting close. You know, it could be a good reversal play if you get it at around 112. It could potentially go up to 125. That would be my target. Uh, Looks much or less like the Boeing chart to me, honestly. If you see the Boeing chart, looks pretty darn close to it. Let's draw another, just out of respect, you know, I like to spend time when you guys ask me names. I like to spend time. I don't like to like give you a 10-second analysis and say, oh, here, I'm done. You guys know I do my work. Always take my time. Again, the 100-day moving average and the 100% fib channel, both the hundreds meet at the same line around $110. Let's say around $110. If it does a false breakdown and gets there, it's a good buying opportunity. Resistance is sitting at 120. Wow, the upper end of the channel, which is the previous COVID, the pre-COVID highs, is 137 is the long-term target. But again, for me to get into this name, two things have to happen. You either gonna buy at 110 and play the breakout, or you're just gonna swing within here until bam. So you get a large ascending wedge, and then you get a small descending wedge. There's a play within a play. It's a confusing chart. If you're in for the dividend, just stay in. That's your choice. If you want to get in, I'll wait definitely till the $110 range. Okay. All right. The last stock is I'm sorry, XPEV. So tired of talking. It's like, wow, I gotta get some break. Very distinguished support on the 100-day moving average. Earnings are coming up. Last earnings, it was a beat, and it had a good reaction. I don't know what's gonna happen this time. For sure, this wedge didn't play out. I think somebody asked me, and at that time, I mean, it seemed reasonable, the cloud bottom, and it looked like it was breaking out. The 20-day moving average was pretty strong of a resistance, and it couldn't handle it. And of course, with all the Tesla news and everything, you know, not the Tesla news, but overall the EV sector with NIO Tesla going down, this also got affected, bounced off the 20, got a rejection, and lost its cloud support, and now it's got a support at the 100-day moving average. So you're telling me, okay, we can see that. Just tell us where it's going to go. Again, I don't have a magic wand. I don't know where things can go. We're just going to go ahead and analyze the chart quickly and see the potential resistance and potential targets to the upside. So this is the floor right here, right? This right here. You can take here. Actually, let's just do this. Okay, there you go. That's going to be a floor. Even if it loses 100-day moving average, it might stop at 37.91. But you can also say that this huge pennant is done. It is basically done. Okay. Now this play doesn't look good at this point. You can even go like this, giving more hope to the stock right here, and say it's done. Okay. If it does try, it's going to go back to the cloud line right here at 46.90. It needs to break above the cloud. That's all I got to say. At this point, it is so tricky. These Asian, like there's so many Asian EVs, there's so many American EVs, there's so many, your CCIVs, the Lucids, the Teslas, the Fiskars, and Helion. I mean, it's a battery company, but you get the what's that company? Just covered a couple days ago. The company that rolled the truck down the hill. Um, so that's how I remember it. So many things I have to do at work, guys. I can't remember everything. There you go. The distinguished. Wow. So this is a pretty good. See, as soon as I said work, somebody's messaging me from work. But 61.8. Wow, it held like a champ. So what did I say? The cloud line, right? The cloud line. It needs to get above the. It needs to break above the 46. Whatever I said, like 4660s. It also coincides with the Fibonacci retracement that I just drew. So let's just frame this chart on your wall, and you can appreciate me later. I'm kidding. It was just a lucky guess, but yeah. So your potential target here is 46.55. Any break above that, that would be tremendous. It could revisit the cloud top, which is 55.95. But if it loses this, you're going to revisit this gap down right here, which is around 34. So if you think this is the lowest it can go, and if you think this is a double bottom, a potential double bottom, you're looking at $62 and maximum upside is 76. But again, how would we know that this is a double bottom? Unless I think we break above the cloud, then I could say, okay, that's safe. But for now, it's only a guess, and it could only stay as a guess. Okay, so that's Xpeng for you, but very interesting that I just randomly draw the extension and it ended up being like, I mean, what did I say, like 39.89, and what's low on this candle? 39.88. So we're off by 1 cent. Gosh, wow. Okay, so that's XPEV. So next up, as I promised, let me go ahead and close this window. As I promised, I said that I'm gonna go ahead and label my like how I do my charts, right? So I always like to leave it at FUBO because I'm watching it like every single second. They pinned it to, goddamn, they pinned it to 43. That is so, this option expiry week is so corrupted. It's ridiculous. Okay, anyhow, I'm going to show you how I do my sets, right? What a busy chart. Wow. Let me delete this crap. So busy. Yeah, this can stay. All right, so how I do my indicators, how I set up my chart, a lot of requests came. Nothing magical, guys. Let's go ahead and do one thing. Let me, before I mess up anything, let me go to my edit studies and make sure that I save this. What should I save it as? YouTube set, I don't know. Let's save it like that and just be sure that I'm going to go ahead and remove all. Reason why I saved it, you see all the, what happened? The studies are still there. Remove all studies. Yes. All right. So we just get a volume and the blank chart, right? So how you want to do things is right here. You're going to click on the charts tab. You're going to click on the chart settings button. Now, first thing first, I don't like the overlap volume, which comes in as default like this. So I just don't like how it interferes with my chart. So what I first do is at the general, I check off the overlap, and this just seems much better, right? Other couple things here that I like to do is I like to go to equities and make sure that my show extended hour trading session is good. But whenever you check that, your chart becomes like very highlighted when you zoom into like 15, 20, 30 minute hour charts. It's because automatically it says highlight the extended hours. I just check that off. Okay. Next thing I do is if you look at options, you could do the same thing. And then let's go to appearance. I like the dark background, so I set it up my chart with as a dark background. That too, I know we talked about doing the studies, but I just want to show you how I set up my chart first, and then tell you all about how we do things. So auto expand to fit. You can or you don't have to, but you can, check off some things here and there. I just don't like all these rollover expiration Friday lines because I don't play options, so I just take them off. And then the price axis, nothing special here. I don't do log scaling. If you do favor it, you can go ahead and do it. Again, you can fit. I don't do orders. I don't do trading from Thinkorswim, so I checked off all of those, but you can leave it. That's fine. So having said that, this is all I do on the chart. Now that the chart looks, dark background, and then the chart looks, you have the volume in a separate box. Let's go ahead and do the studies. So first thing first, why I saved my studies, because you can actually load your studies. Do you see? And if you push it down, you get back your studies. So let me go ahead and what did I do? Remove. How did I? Oh yeah, I went to studies and I said remove all studies. Okay. So let's go ahead and add them one by one. First of all, when I do my charts, and again, you can use the exponential moving average instead of simple moving average. That's your choice, right? So let's go to studies and let's go to edit studies. You can use the menu to quickly add, but I like to do it here because I can just search it. It's much easier. So you can do moving average, just type moving average if it does come up. Yeah, it did come up. So you have like a bunch of moving averages, right? And you're going to be like, oh, which one do we pick? Simple moving average, okay? You're going to add, I use a 9-day moving average, 20, and 50 and 100. So some people use 20, 50, and 200. Some people use 10. Some people use 10, 20, 50. So it all depends. Some people use the 34 EMA, 21 EMA, so exponential moving average. So it's all your choice. And just because I do something, it doesn't have to be correct. It's just a way that I think it works. So that's how I do it. So then, of course, we have the 9-day by default. So what I'm going to do is change the second one to 20 and change to whatever color you want, like whatever you're used to, right? And then here you go. So we said 9, 20, and then our next one is 50, and then we'll change again to a different color, and then we'll go ahead and do 100. I like to use 100 more than 200, but you can go ahead and add 200 instead. That's your choice. I don't know. You can pick a random color so that they all have distinguished different colors. Now that you click apply, there you go. You got your 9-day, 20, 50, and 100. Okay. And then the next thing I do is I go ahead and do my lower studies, which is the MACD. So let's go ahead and do MACD. Add MACD. I don't do anything to the MACD. I just leave it as is. And then I do stochastics. I do full stochastics, and then RSI, relative strength index. So there you go. You can add the selected and click apply. There you go. So anything hard, guys, nothing too magical, nothing. So the one part that's missing is the Ichimoku cloud, which is the most confusing part, and I'm gonna get to it right now. And I left the hardest one for the last one, so I can clearly show you how I set up my Ichimoku cloud. And if you want, if you want to learn more about it, there's a question mark. I think there's a link. You can click more details and learn about it. But double click on it, it'll push it into your price. Wherever it says price, it's basically on the chart. Wherever it says lower, it's at the bottom of the chart. There's no upper study on this one. I usually the stockcharts.com puts the RSI index at the top of the channel, top of the chart. Okay, so then we're gonna edit the Ichimoku study. Reason why is because I'm using the moving day averages, and Ichimoku, like you can take off the Tenkan, you can take off the Kijun, span A, B can stay, you can take off the Chiku. Okay. And then one thing I like to do is when I go to globals, you see how bearish is red but bullish is yellow? I like to make the bullish green and then a little lighter color so that it's easier on the eye. And same thing with the span A and B. So you can go ahead and do the lighter red, and then you can do the green right here. The color, let's take a look. Let's apply it and see what the where the yellow is. So you can mark the yellow as red as well, or you can just simply change the yellow to gray as well. Doesn't matter. I mean, as long as you can see the lines to my, they, of course they all have different meanings. That's also you have to do some studying off of the Ichimoku cloud and what it is. A lot of people ask me like how I learned, and there you go. I set up my chart for you. If you double click on Ichimoku Cloud, it'll quickly take you back here, okay? What you could also do is, you see how it says like show bubble, show title, show plot? It'll tell you like where the levels of some of the parts in the Ichimoku Cloud is if you do apply all these input names and so forth. I don't like to do them. I like to leave it as default. Also, because of thermal mode. Yeah, I don't want the thermal mode. What I was going to get into is maybe you can actually do the green even lighter. I think that's what I did. I went with the lighter green color. There you go. Apply it. Yep, there you go. So it's easier on the eye. It's much better this way. And that's it. That's how I do my studies. Simple. That's also TOS. I mean, you could do this in other trading platforms, but I just wanted to show you because there's been lots and lots of requests on how I do the charts or how I set up my study sets. So then once you're finished with it, right, just go back to edit studies and just save this as a study set so that if something happens, you take off something by accident, you can go back to studies and just say load set. And I think that was mine. I don't know. I just made it up as ultimate setup. But yeah, that's mine. Okay. I chose my colors in a certain way so that I don't forget, but that's your choice as well. You don't have to choose the same colors as I do. It's just like 9-day is more bullish, 20 is warning, you know, 50 is like not red, which red is like the most warning to me. So pink is like close to red, so that's 50, and then the 100 is like, okay, you know, you're in a danger. So type of thing. That's how I dreamed of it, and that's how I remember it, but that's your choice. So that's all it takes, guys. It's very simple. I don't know if I made it simple. You know, I do work on, you know, AWS cloud environment, all this cybersecurity, performance, aspects of, you know, cloud server. So I happen to, you know, click here, click there, and move fast, and you know, I do a lot of computing work at my job, so it might seem like I did it so fast. I don't know if I went fast, but you can always, you know, slow down the speed, pause, and do your own thing, okay? Having said that, one more thing I wanted to show you, which I promised, is like, if you're absolutely not good at computers or you don't have a platform, you don't have, how you get the Thinkorswim platform is basically you have to have TD Ameritrade account, and then you search Thinkorswim download and then download it, and basically it'll allow you to download it only if you have your TD Ameritrade um, username and password. So you have to be a member. So if you don't like the chart, if you don't like the draw, you're not good with the mouse, you're not good with the computer, or your computer won't support, your graphic card won't support such a heavy program or something, right? You can always just simply, you know, if you want to search FUBO, you can search FUBO. There you go. Very simplistic, right? Not all the companies are able to like go ahead and give you this charting. Like if you go to Apple, right? Look at this. Look at the channel it drew. So would you buy Apple here? Yeah. But then you look at the weekly, right? Would you buy Apple here? I don't know, because it could sink down to 120. So you get a good idea of what's going on. You don't have to have necessarily a trading platform, or you could basically also do, what you could also do is, see, this is without the drawing, right? If you go to advanced, then there you go. It'll draw you the chart. So you can also do, some people choose it to go through the investing.com platform. Some people do the tradingview.com platform, but they're basically the same chart. You could, you know, chart your things there, but you're limited to do only 4 studies at a time. So, you know, that's your choice. But that's what I like to tell people is like, if you're absolutely not sure how to chart, you just want to get a good idea of what possible formations could be there, you can visit the FinViz and then say, oh, there's a channel, let me go ahead and draw the same thing and learn from there. I didn't read a book. I didn't do, financial major or anything. So a lot of people are asking me about, what were the books that I read? What were, how did I get to where I am? Guys, I'm nowhere. I'm just nobody. So don't think like I'm a professor of charts or anything. I just draw a couple of lines here and there. But eventually you'll just basically do the same thing. You just open a chart in ChartsMill and FinViz and try to draw it, practice it, buy the chart you're drawing, maybe just buy one share. It doesn't matter if it's $5, doesn't matter if it's, $50. Buy it, practice it with it, and that's how I got good with it. You see this double bottom and then bam. Okay. So this, you can go to Apple on ChartMill and see their technical analysis. Okay. You're saying that, okay, I don't know where this weekly trend line is coming, but it's obviously way up here. And then it's saying that potentially if market crashes, I think if any crash, it's probably going to go to maximum $90. But here, this is on the daily chart, things look a lot different. There's a trend obviously going down, and 125, which I've said that it could revisit 125. There's no setup here that it's saying, but again, 125 and then your 110 maximum downside, which we had said, and there's a huge gap here. It tried to fill before it didn't. Worst case worse, if we get a huge correction, we might even fill the gap around, again, 110, 105 would be the worst case scenario. I'm not saying it's going to go there, but you can just look at the chart and just, evaluate it. And that's how I did it. Fundamentally, I'm not a fundamental analysis guy, but there's so many things here that you can when I started charting, I mean ChartMill is pretty old, but it didn't have this many futures that it had before when it first came out. You can see if this is an easier interactive way, 60% institutional ownership, so you can see some of the things. Price target is 151, so it makes it easier for people to chart these days. So that's all. I hope I was helpful for everybody. At times, charting is not everything. Sometimes fundamentals kick in. Sometimes, any news hit and you're just, some virus comes out and wipes you out. So that, wipes out the economy. So you gotta, you can't live by the charts all the time. But I use charts 90% of the time because it's been working out for me. And I hope that I was helpful enough to explain and just show you what my thought process is when I'm doing these charts. Hoped you liked this episode. We've been doing it every day because I've been spending like 2 hours every day. And if you think the content is good and I'm helping you, all I want is the like button and a subscribe. Tell your friends, have your friends watch us, and if they're in the market starting, um, I'm not one of those guys that pump the stock or just say doomsday and so forth. Just analyze it. Even though I own FUBO, I can say when it was 49, I said it could easily come down to 42.38. I'm very open to saying and analyzing even my mistakes. So come and visit our channel, view, give us a like, subscribe, and hope I can teach you one or two things. Okay. Have a wonderful weekend. Enjoy your family time, and we'll see you guys on Monday.